Accelerating write-offs. Accelerate write-offs and defer your income by estimating your 2016 contributions. You are able to think about or take an average of how much you normally donate throughout the year this year and keep a total of that. And you'll see towards the end of the year, you spent X amount of dollars. You've given it to a church or you've donated to an organization of your choice. You'll want to then estimate your 2016 contributions based off what you gave in 2015. And you can claim that estimate on your 2015 tax return as a deduction. But you must also send the check out, and you must also go ahead and donate those items within the current year, but you're able to decrease your taxable income by filing them early. Another tip when it comes to taxes and investments. So utilize the capital gains that you make on your investments. Let's say you have a stock and it has appreciated in value. When you go to pull that stock and get the collections, you're going to be taxed on the appreciation. However, if you use the value of the appreciated stock, however much the capital gain was, and you donate using that money, you're able to write off the complete amount of the donation, and you won't have to pay taxes on that capital gain because it was used for a donation. In regards to medical tax tips, the threshold for your adjusted gross income is 7.5% for individuals who are 65 and older and 10% for those individuals who aren't. This means that once you hit that threshold in medical expenses and you still have, let's say, taxable income that you want to decrease, go ahead and get some of those elective surgeries. You can, any costly surgeries that you may anticipate, any body enhancements, any elective procedures that you want, paying for those medical expenses is a deduction that you could put onto your tax return. So check into your plan and see what's available for you to do with your medical expenses and deductions with them. When it comes to children and their medical and dental expenses, if you are a non-custodial parent and you still support your child with their medical and dental expenses, you may still be able to claim those deductions on your tax return if the child is considered a qualified child. So look into that as well. When it comes to your standard deductions, try to be flexible with the way you itemize them. So sometimes you'll deduct your expenses and you'll see that you'll just hit the threshold where there's the amount that they're going to just standardly take off for you. If you're just over that amount, consider shifting the expenses from 2014 into the 2015 year. This will allow you to be able to take the standard deduction in 2014, and in 2015, you'll be able to itemize moving forward. Let's look at tips for your investment gains and losses. When you go to calculate how much you gained on your investments and how much you may have possibly lost on your investments, to offset the capital gains tax, you want to sell off the bad investments and keep the good ones so that you taking the loss on the ones that did not perform can offset how much you made on the ones that you gained. That's the way to decrease that income tax that you're going to be charged on those capital gains. For those hard-working people out there, keep receipts of all your mileage, of all of your expenses that you incur when you're going to work or any job-related costs that you have to pay for. Keep record of that. Anything over 2% of your adjusted gross income can be deducted on your tax return. Also, for business owners, keep account of all of your necessary and ordinary operating expenses. These expenses and startup costs up to $5,000 can be claimed on your tax return. And for small business owners, there is a credit of up to 50% for some of the contributions that you make towards your employees' health plans. So keep those things in mind too. And for those people who are looking for jobs, the money that you spend actively seeking employment, those costs that you incur while you were looking for a job can possibly be deducted too. So make sure you're keeping record of the time and the money that you're spending in order to be a productive citizen. The last medical tips is that if you were not covered for health insurance in the 2014 year, you will be penalized for that with your tax return in 2015, and you're going to be penalized for it in 2014. But in order to receive the economic hardship exemption, you want to go ahead and receive the certificate from the health exchange. They will give you a number that you're going to enter onto your tax form, and that way you'll be able to support the claimed exemption and you won't be penalized for it. So look into that number from your health exchange.